set to start the week. David Williams, investor and forecaster from Page Trader, joins us to help us do that. David, welcome. Happy Monday. I'm seeing an interesting divergence with crude and the ES. Not often do you see the S&P down 3 weeks in a row while crude's been up the last 5.
Hey, good morning, Ben. Great to be here. You know, that is a great observation. We agree entirely with that. It is not very often that you're going to see crude oil and S&P diverge in the manner that they have. And that really makes a statement about the geopolitical risk that's keeping crude up. If you'd like, we can talk for a moment about crude, but the bigger picture for crude is that it remains in a very strong position. And the risks that are associated with Ukraine and many, many other factors are keeping it in place, and probably the reasoning for this big divergence.
Yeah, a big divergence at the say the least. So I want to just kind of spell it out in a couple different ways. If we could get into this chart, here's a look at the weekly time frame. I've got the ES on the left. I've got crude on the right. You can see the sharp move higher in both contracts since the pandemic lows, but a significant retreat off those all-time highs. I just showed that on the charts a minute ago, David, before we brought you in. While here you can see again, crude 5 weeks in a row to the upside. Another look at that is this divergence here as we lay them on top of each other. In this instance, I've got the ES and the candles. Crude is this purple line. You can see again how it has, well, in the top right corner, continued to the upside while the ES has sharply reversed. Let's talk a little bit, David, about, well, some of the price levels that you have your eye on in terms of crude, because you were talking about some potential advances. We saw it all the way up into the $87 level.
Yeah, great move up. We had mentioned last week or on January 10th on your program that if crude could get back above $80, it would advance to the $85, $86 level or higher. The next day, crude did close above $80. Which really was a strong position for it to be in. And I want to say that in our work, crude remains in such a strong position that we, under these conditions, we would disregard all short selling indications until the market reaches the $91 to $92 upside target that we've spoken about, Ben, in the past. Now, having said that, under more normal, less trending market conditions, we would consider last week a weekly top. And we would be expecting a decline normally for the market to come back down just marginally to the $82 to $81 level by the week of, say, February 7th. And if that occurs, we're interested in buying down at 81 to 82. We just can't be as certain as we normally would be because the trend is so powerful. So beyond 91 to 92, we're also saying that we see 104 to 105. Into 2023, particularly if 2022 ends up closing above $78.